Hello and welcome to Investment Strategy. I'm Vishal.
Hey, I'm Sharvari, and here's why you should stay with us till the end. Our expert team has constructed detailed mutual fund model portfolios for aggressive, moderate, and conservative investors with actual fund ideas you can use right now.
Now, here is what makes this month interesting. In March, markets corrected sharply. In April, they bounced back sharply. Right, Sharvari?
Absolutely. Nifty rose 5.18%, mid cap delivered 11.38%, and small cap gained 14.11% as on 28th April 2026.
So the recovery was strong and broad, but the real question is, has the market stabilized or is this just a temporary bounce?
Exactly, because the risks that triggered the fall are still there. Oil is around $100 and global conditions remain tight.
So let's start by understanding what exactly changed in April.
A good place to start is how the market performed. Nifty Small Cap 250 was up by 14.11%, Nifty Next 50 gained 13.77%, Nifty Mid Cap 150 rose by 11.38%, and Nifty 50 moved up by 5.18%.
So clearly, the sharper the fall in March, the stronger the recovery in April. Fair to say this was a typical rebound phase. Would you agree, Sharbari?
Yes, very much so. And if you look at the sectors, the leadership is quite clear. Defense was up 20.1%, realty gained 18.5%, metal rose 16.9%, and energy 16.4%.
But it wasn't a uniform rally, was it? What stood out on the weaker side?
Pharma moved up just 2.6%, and IT declined by 1.8%.
So this tells you the rally is selective, not driven by broader conviction yet.
Exactly, Vishal. It's more of a sentiment recovery than a fundamental shift.
Now let's connect this to flows and valuations because that explains the behavior much better.
Let's talk about flows first. FII outflows reduced to rupees 59,619 crore rupees in April from 1,22,540 crore rupees in March 2026.
That's a sharp drop, so selling pressure reduced significantly.
Yes, and that easing of pressure itself supported the market. Coming to valuations now, Nifty Forward PE, which is a simple metric used to understand whether Nifty 50 is expensive or cheap based on earning expectations, moved up from 19.41 from 17.88 at the end of March.
But still below the 3-year-old average of 20.4, right?
Exactly, Vishal. So, markets have moved from clearly attractive to more neutral zone.
Which means upside exists, but it's more measured from here.
That's right. And to understand what could drive markets next, we need to look at the global picture. The biggest trigger for the recovery came from geopolitics. A 2-week US-Iran ceasefire from April 7 helped stabilize crude oil around $100 per barrel.
So the panic cooled off, but the risk hasn't disappeared.
That's right. Oil at these levels still impact inflation and growth.
And globally, the environment is still quite tight, isn't it?
Yes. US bond yields are near 4.3% and Federal Reserve has not cut rates in recent policy.
So liquidity remains constrained globally.
On the India side, the RBI's latest monetary policy projects India's GDP growth at 6.9% for FY27. Q2 growth has revised from 7% to 6.7%.
And inflation expectations have edged up as well.
Which brings us neatly to the next talk point, RBI's policymaking. CPI inflation for March is at 3.4%, up from 3.2% in February, but still below 4% target.
So still comfortable, but the direction is upward.
Exactly, and RBI's policy are reflecting that caution.
Yes, repo rate has been maintained at 5.25% with a neutral stance. They are clearly waiting before making any moves.
So, no immediate rate cuts expectations, right, Vishal?
Right, and that also shows up in the debt market.
Bond yields have stayed elevated. The 10-year yield moved from 6.71% to 6.94% during April.
Which essentially reflects ongoing uncertainty. Am I right?
100%. And that feeds directly into how investors should approach the market now. Let's dive straight into the investment strategy now. So, Vishal, given all of this, what's the clear strategy now?
3 clear points. Valuations are reasonable but not cheap. Risks from oil and geopolitics are still active. And this is not a market to chase aggressively.
So, instead of investing all at once, it makes sense to spread it out over time.
Yes, gradual allocation is key. Focus more on large caps and then add mid caps over time.
And gold still plays a role.
Yes, but purely as a hedge, not as a returns driver.
So, disciplined allocation becomes more important than timing.
Absolutely. And that brings us to the most important part of this discussion, model portfolios.
Vishal, would you like to break down the model portfolios for May 2026?
Of course, I'll start with aggressive investors. This portfolio is focused on growth. It includes large caps like Mirae Asset Large Cap and ICICI Prudential Large Cap, mid caps like Mirae Asset Mid Cap and White Oak Mid Cap, small caps like Mirae Asset Small Cap and Bandhan Small Cap, flexi cap through Parag Parik Flexi Cap, and thematic exposure through consumer and manufacturing funds.
So, high growth potential but higher volatility.
That's right. Now the moderate portfolio balances growth and stability.
Right. It includes large caps and mid caps, but also balance advantage funds, corporate bonds, short duration funds, and gold.
And finally, the conservative portfolio focuses on capital preservation.
With most of the allocation in corporate bonds and short duration funds, limited equity through balance funds, and some gold.
So instead of reacting to market movements, investors can follow a structured allocation with this portfolio.
Now, apart from these, there are also two specialized baskets. The regular income basket is designed for investors who are putting in a lump sum and want steady income with moderate risk. This is more about consistency and income rather than high growth. The second one is the Build India basket. This is for investors who want to participate in India's long-term growth story. It's higher risk but a more focused bet on India's growth themes. Before we close, here's something we'd like to know from you. Do you think this recovery will sustain or do you expect more volatility this month and beyond?
And what is your personal strategy in this market right now? Investing more, waiting, or taking some money off the table? We can't wait to hear from you in the comments.
Yes, it'll be quite interesting to read what our viewers feel. To summarize, the markets have stabilized, but uncertainty still lingers.
Which makes discipline and asset allocation more important than timing.
Also, all our research is now available under one platform, the Mirae Asset Sharekhan Research Center. You can explore detailed reports and ideas across segments on research.sharekhan.com.
If this video helped you, do like, subscribe, and share.
Happy investing.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully before investing.